Morning traders, happy Thursday. I hope that you guys are all having a great day your side. So far, we got a few things to speak about in this pre-market prep as always. So yesterday, we obviously had that massive flush down on the indexes. Some key points to note. Today, we have CPI. Okay, so keep that in mind. And then we have this level on ES and 830, which we will speak about in a minute, that has been holding as support. But my trade yesterday, I had two of them. One on ES, I caught the shorts, okay, shorts to the downside, and I ended up getting out at about 830, but we ended up dropping down way lower. We broke that 830 support. That's why I ended up getting out at that level. But we ended up dropping down way down into the 700s. But yeah, just a really nice continuation trade yesterday. But we are bouncing this morning so far off of those lows. My second trade was on Tesla as well. So again, another nice move there. I don't end up catching all of it, but hey, I'm never going to catch all of the move. And I think that's also a topic that I wanted to speak about on today's pre-market stream, is that you're never going to catch all of the move. So you might as well just go for your play. And my play was looking back on Tesla back into this 481 zone. So we have a break and retest of the opening range. We take out the opening range low over here. Don't take out the highs. We get back underneath New York session open VWAP. And I end up taking the shorts back down to that 482 zone, which was the level that I was looking for. Now, obviously, this carries on tanking off down into the 470s. But I think it was a good trade my side. Maybe I could have left a runner, but I think a good trade my side and well managed. Now, on the ES trade, just on some levels that I am looking for on ES, at the moment we are holding that 800 zone. So what I've been seeing just from a larger time frame perspective, we've been dropping down and then we bid back up. So what we can see is on ES, just on the hourly time frame, I've even had the zone at 800 drawn across my screen over here. We've been dropping down and we bid back up for the last 2 weeks. Now, interesting, we do have CPI today, as I mentioned, at 3:30 p.m. South African time. So that will be at 8:30 a.m. Eastern time. Now, this is delayed, release date delayed due to by 8 days due to US government shutdown. So keep that in mind. Okay, this data, is all coming out. It's a weird one this week. We also had NFP come out on Tuesday, which I've never had an NFP come out on a Tuesday either. So very interesting, with the data being delayed with the government shutdowns and everything like that. And I think it's just a weird December. Now, something that you could have looked at yesterday, particularly on that Tesla trade, is that opening candle continuation, right? So let's go to the opening candle continuation trade on edgeful's data over here. What we can see is, let's go year to date. Okay, like this. What we can see year to date, if that first hour is bullish, 77.8% of the time we close the day as a green closing candle. For the shorts, if the first hour is bearish, we will close the day bearish as a red closing day 72.6% of the time. And I think that's just really nice. We can see on, I think if everyone wants a simple way to trade, look what that first hour does. Look for continuation in that first hour's direction. I think it's a simple way. Obviously, I like stacking other things like orb and VWAP, but for you that are maybe wanting to keep your trading simple, I think that's a very easy way to get started in making your trading a lot more simple for you guys. Any questions in the chat right now? Make sure to put them there. Any questions in the chat? Make sure to put them in and I'll answer. Okay, so I think in terms of levels today, let's just go like this. Let's hide that. I had my drawings from yesterday. In terms of levels that I am looking at, so let's just go out to my 15-minute time frame and we can make sure this is on here. Okay, like this. Okay, so we are trading underneath the weekly VWAP at the moment. Obviously, today is Thursday, but we are trading underneath the weekly VWAP. We did break out for the lows as well. I know there's that, it's that opening week range report. So let's just go to it here. Opening week range. Okay, so when Monday and Tuesday set a high and low, we've taken out that low set from Monday and Tuesday. The lows were down here at 811, 810, and we now have taken them out. We are trading below previous week's lows as well. So definitely not, sellers have been in control. It's going to be interesting. Do we see a squeeze on CPI? If CPI data comes in and we start to squeeze, I think those highs back here at 881 could definitely be in touch. So let's just go to the 15-minute time frame over here. Okay, let's zoom out a little bit, get some levels going. So we definitely want these highs. We can extend these highs over here. Okay, 877, 880. And then if we do stay underneath these this 815 level, 810 level, I definitely think that we could see lower on ES. I like to look at the ES as a whole, and then I kind of get a gauge of what stocks want to do from there. Personally, for me, if ES is coming down, I will look to stay short bias on a lot of my individual stocks as well. So if I'm trading like Robinhood, Tesla, Nvidia, I will look to short those stocks as well. I don't like going against my trend or idea that ES is giving. And then back down at 750, 760 is another level on ES that we could be looking at. So let's go back to the 5-minute. I love my 5-minute entries personally. So that's what I do. I get my levels from the 15 and hourly, and then I look for entries on the 5. That's personally what I do. And then I like you can see I got my 4 charts over here. I got my entry time frame, the 5-minute with my levels on. Then I got the 15, the hourly, and then as well as the daily time frame. Now, if we go to the daily time frame on ES as well, we can see that everyone starts to panic, and I think this is a great place to be buying personally. For a long-term perspective, we're sitting at that daily 50 EMA, which is this blue line over here. Okay, and we are only 2% of all-time highs. So everyone starts to panic in that, but we're still only 2% of all-time highs. So just want to make sure that the audio is coming through all good though. But yeah, all good and well. Yeah, I think we could definitely see a little bit of a bounce at this level. That's why particularly when we have overnight moves where we're just making complete, relief balances here, rally balances. Stocks are green, all pre-market. Nvidia and Tesla over % across the broader watch list as well. We've got Robinhood up 2%, Rivian up 3.5%. So stocks are getting some green here. As I said, I think that CPI data at 3:30 p.m. South African time will be a big factor and to see what we do get the rest of the year, even closing out 2026. If we look at how 2026 has performed, 2025, sorry, has performed as a whole. It's ending of 2025 and going into 2026. My apologies. But if we look at the S&P 500 as a whole, let's just bring this up here. We can see that year to date, we've actually had a pretty good year in terms of the stock market. We're up 14.5% year to date. I think the futures contract, we'll have to look at that exclusively, but we are trading really, really well. The only thing is Bitcoin is still trading underneath 90K. We had some crazy volatility on Bitcoin yesterday. I don't know for those that day trade Bitcoin, but we had a big spike, up 3%, and then all of a sudden up to 90K, and then all of a sudden back down to 85K. So some big volatility coming in, and it must be said that this is a little bit. This is a day trader's paradise, the volatility. We want and need that volatility as day traders, right? So if we can clear and hold above this 810 level, I definitely think a move back up into that 880 zone could be on the cards. Next support and resistance will be back at that 840, 835 zone on ES. Okay, I can speak a little bit about that opening week range report, which I mentioned on ES levels as well a little bit earlier. So ES, okay, let's just go to the daily time frame because I want the extended market hours on. I personally love using the extended market hours for data. Obviously, unless it's that opening candle continuation, then looking at from the start of 9:30, right? But if you're looking at this, okay, so after Monday and Tuesday sets a high and low. So let's just go to the chart. So let's just get a simple version of this. So Monday and Tuesday will set a high and a low. Now, what this is saying is that only 30% of the time do we break both the opening week high and the low. That means that if we take out the high, very rarely do we come back down and take the low. If we take the high out, we want to be looking for pullbacks and looking for longs and extension. This week, we have taken out the lows. So we were looking for pullbacks and extensions lower. That's all it is. Okay. Give me a thumbs up in the chat if that makes sense for you guys. That's all it is. Okay, so if you go to the visual representation of this week, okay, let's go to my 15-minute time frame over here at the bottom. We have taken out the lows. Here is the low of week set over there. Let's get a bit of drawing like this. Okay, we've set the low. And then the high from Monday and Tuesday is back up here. So we've now taken out the low. We want to be looking for pullbacks and looking for some continuation lower. That's what that stat is telling me. Obviously, I want to see if price action matches up to it. But for now, we are staying bearish because we are trading underneath levels, right? If you hold this 8 level, we could see higher, but we are holding underneath levels, at least for now. Anyone got any questions on that as well? Okay, so definitely, as I said, like as long as we hold underneath 810, I think we could see lower, and that will go with that opening week range report. But again, you got to match up with the current day's price action as well. I think a lot of the guys where they find themselves going south is where they're just looking at data, but they're not applying it with price action. Now, if you're trading completely systematically, I get it. But for me as a discretional trader, I prefer to match price action with the data. Okay, so a few other things to speak about heading into 2025. Heading into 2025. Listen to me, I'm getting my years mixed up. This December's been crazy, but heading into 2026, okay, I always encourage you guys to go and bet yourself off the charts too. So something that you guys can maybe have a look at is, I recommend 2 blog posts to have a look at. First one is this trader feed, okay? And the second one is that Jared Tenner's blog post as well. I find these super helpful for myself and my own trading, but you can go through a bunch of these blog posts and go have a look at them. Okay, so I really, really do enjoy both of these blog posts, and there's some great stuff to chat about. I was reading one yesterday that we can also maybe touch upon here, pre-market prep as well. Something that I've been working religiously on with my performance coaches here is preparation. This goes in with what I'm saying about this pre-market prep. Not only helps me, hopefully helps you guys, but gets me in the right mind frame to be looking to trade from a correct perspective. Okay. So if you guys have had a year where maybe things haven't gone according to plan, or it's been a little bit more of a tough year, I urge you guys to really look at your data, see where you're going wrong, and start to make decisions. I think for those that have been in the game too long, you can't carry on making the same mistakes over and over again and expect different results. I'm speaking to guys that have been in the game, trying to make trading work, but haven't been seeing any results. Well, it's simple. You can't carry on making the same mistakes again and again and again and expect different results. And I don't want you guys to have 2026 be the same. You have to make adjustments. Now, something on our live stream yesterday where we caught those nice shorts on ES is a lot of the guys, we were in the trade and we we're experiencing a little bit of drawdown, right, on our ES position. We're in the trade here. Okay, I shorted it. I'll show over here in a minute. I shorted it here. Okay, so zoom in a little bit over here. I shorted it over here. Okay, and we experienced a little bit of drawdown on my stop at opening range high. And look at this chop that we experienced here. For a good 25 minutes, we were sitting in a bit of chop. And some of the guys were going back and forth into profit, out of profit. And some of them actually ended up pulling their trades. And I spoke to them and I said, listen, your position size is too big. If you're in at the correct position size, you'll be just fine. I think the biggest mistake that traders make is their position size is too big. And it's like a volume dial on your emotions. The bigger the size, the more erratic and irrational your decision making is going to be. The correct position sizing where it fits just you. Some people can handle more risk. If you're trading a personal trading account, some guys are okay with $1,000 of risk. Some guys are okay with $100 of risk. You need to find what suits you. But when you have too big of a position size on, you can't actually think with that rational decision-making, logical processes. And that will get you out of winning trades, get you, revenge trading because you've now taken a loss that is too big that you can't handle. And I just think that going into 2026, I think if you can get your position sizing right on your trades that you're comfortable with, you'll make a lot more sound trading decisions. Think of all the trades this year where maybe you've messed up or anything like that. Has it been from oversizing, which then causes overtrading? It causes a host of problems. I've seen personally, I'm speaking from my own experience here. But I think if you can get that position sizing right, you will be just fine in this choppier market. This can come up and stop me out. That's okay. I'm not going to win every single trade. You've seen me, I've been doing pretty well on the edgeful live streams. I've had a solid year. I've done well this year for myself. Okay, my family. But I'm not going to win every trade. And that's where position sizing comes in and plays an important factor in terms of making crucial decisions. Okay, so I want to bring up one of those blog posts in a sec, but I think I just wanted to speak about that in terms of position sizing. So there was a video, not a blog post, sorry, it was a video by S&B Capital. I'm sure a lot of you guys might have already heard of them, but they speak about position sizing and finding, the best, the best positions to size up on. And I found that to be something that has really, really helped me in my trading, is that if you're taking all your trades at the same risk, you put yourself in a position, okay? You put yourself in a position where you take losses on your C trades the same as that you would on your A plus trades as well. And that just doesn't work and sit well with me. So I want to find this video for you. I did have it up here a second ago. Let's get it up here. Okay, so this was the video, and I'll put it in the chat here as well. But it is this video here, and he speaks about position sizing. Lawrence Breinstein, he speaks about different position sizing on your A plus trades, which I think was very, very important. Okay, so yeah, I want you guys to go and watch this, but yeah, equally bet sized, linearly bet sized, and exponential bet sizing. So they were speaking about exponential bet sizing, okay, and betting bigger on your base trades. And that's as simple as that. So that goes according to what I was saying earlier about using different position sizing and making sure you got a right position sizing. For you personally, I've got days where I like to bet bigger. Like yesterday, I bet bigger. I've also got market conditions that I will bet bigger on as well. When the VIX is trading above 20, it's volatile. I like to bet bigger because I know that markets are going to be more volatile, but moving in my direction, and I can go with a slightly wider stop. And the nice thing I like about CFDs, I can still risk the same amount that I want to with a larger stop. Futures contracts work a little bit different, but yeah, that's a discussion for another day. Perfect. If you've enjoyed these pre-market preps as well this year, please comment in the chat. Let us know what we can do to continue making it great for you guys in 2026. And then obviously we've just started the edgeful live streams last month. Mondays and Fridays we might be adding more potentially, but Mondays and Fridays 9 a.m. Eastern time, Andre and myself will be live on edgeful's YouTube channel, my YouTube channel, my socials, edgeful socials, and Andre's socials across the board. You know, taking trades live, showing you how we actually use the edgeful data in real time. Just something interesting as well, the DAX I spoke about, probably I might be leaning into trading a little bit more come 2026, the beginning part of it as well. I've spoken about this volume trends, but if you look at something interesting here on the DAX, okay, and I know this is for the guys that might be watching this that are in the same time zone as me, so they can trade London session. It's not middle of the morning. London session open is currently 10 a.m. South African time. But look at the volumes. Very, very nice to start the year. This is in the last 4 years on the DAX. Volume is very, very big in the start of the year and then drops off into the latter half of the year. And that's why I've kind of gone away with it, only stuck to the New York session more recently. Anyone here that does trade London session a little bit, this could be very, very big and important for you. You can even look at the opening candle continuation. Now, we will have to look at the London session time for this. Okay. London session is 3 a.m. Eastern time. So that first hour bullish, 68% of the time, first hour bearish 62. So definitely better opening candle continuation on the US equities and indexes. And that's been my focus recently. And I think, you know, another thing going into 2026 is just less time on the screens, better time on the screens, meaning that like you don't need to be trading all day, every single day to be making this work for yourself, right? But yeah, maybe I'll go over a quick recap into what you guys can maybe look at. So a couple of reports that I use on the edgeful data is that previous day's range report, previous day's highs, looking if we take out the previous day's highs, you know, are we looking for continuation or reversals? You guys know I love using those levels. The opening candle continuation, and then I pair that with the orb and the VWAP. Okay, so previous day's range, opening candle continuation, and I pair that with the opening range breakout, you know, looking to buy or sell below or above the opening range, high and low, and then VWAP as well. But I explain this on the live streams, and if you guys have got more in-depth questions, please make sure to come join us there as well. Okay, so we'll wrap up here in the next couple of minutes, but I hope that you guys have had a good week so far. We got Thursday, we got CPI. Don't look to, you know, force anything on today. And then obviously Friday, we, you know, kind of packing up, heading into Christmas. Next week is Christmas, next week, Thursday. So a lot of bank holidays next week. Monday, we don't have news. Tuesday, we got a little bit of USD news. Wednesday is a European bank holiday. And then Thursday is a bank holiday across the board, as well as Friday. So my advice to you guys should be your last full trading week of the year. I wouldn't be looking to do too much over risking or anything like that. And this comes from preparation. As I said, I've been working very hard on my preparation. And, I think a lot of traders, they think that they can come in every single week and look to trade the same. They had a great week last week, so they can come and have a great week this week. Doesn't work like that. You need to be looking at market conditions, what is on the horizons, what fundamentals are in play, bank holidays, obviously ties into fundamentals, but bank holidays, and what market environment are we in? Now is not a time to be looking to push and make your year or make your month. Yes, there are going to be trades, like there were some beautiful trades yesterday, but with all of the bank holidays next week, I would be looking to wrap and wind things down. It's my own opinion. You can take it or leave it, but that is my personal opinion on that. But yeah, got some levels for you guys. I've given some great levels on ES. I've spoken about a few psychological stuff that I'm working on that hopefully you guys resonates with you guys. I'll leave you guys here, and I hope that you guys have a fantastic Thursday. We'll see you on stream tomorrow and Friday with Andre, and then heading into Christmas. Cheers, guys. Have a good one. We'll see you all then.